Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, as consultations begin on a new trade deal with the U.S., what are Canadian businesses thinking? And Canada's Minister of Energy and Natural Resources on a new era of getting big projects done. Plus, young people are finding it hard to get work, but are they being discriminated against? That's all ahead. First, for the week that was in business, it's time for the briefs. Global growth will be better than expected this year, according to the OECD. In its updated forecast, the group said that while the effective tariff rate on imports to the U.S. is at 19%, levels not seen since the 1930s, most economies are proving to be more resilient than expected. The OECD now sees global growth of 3.2% this year, up from its view of 2.9% in June. Canada is forecast to grow at 1.1% this year. The TSX rose above 30,000 for the first time on record this week, driven by higher resource prices and a strong slate of profit reports from some of its biggest components. Gold in particular was a catalyst as the precious metal continued to hit new records this week. 3/4 of Canadians are choosing to eat out less frequently. According to data from Restaurants Canada, the high cost of living is keeping people at home, and that is even more true for younger Canadians. 41% of restaurants in Canada said they were operating at a loss or just break even in June. Canadian food and beverage firms could find new markets for $12 billion of exports that currently goes to the U.S., according to Farm Credit Canada. The Crown Corp released a strategy plan this week to reduce reliance on the American market to half of 2023 levels by strengthening domestic markets and establishing new international ones. TikTok violated Canada's privacy laws by collecting sensitive data about hundreds of thousands of children, according to the Privacy Commissioner. TikTok's terms of service prohibits use by children under age 13, but its controls were not strong enough, leaving the platform free to collect information about the kids and use it to target them with ads and content. NVIDIA, market leader in chips for artificial intelligence, is investing up to $100 billion in OpenAI, one of the highest profile AI firms. The deal will see NVIDIA supply OpenAI with the chips it needs in data centers, but the partnership between two key players in this emerging space may yet face antitrust scrutiny in America. And those are your business briefs. Consultations have begun as Canada gets set to reopen its trade agreement with the U.S., and business in Canada obviously has a lot riding on the outcome. Matthew Holmes is EVP International and Chief Public Policy at the Canadian Chamber of Commerce. Thanks for being with us, Matthew.
Great to be with you, Amanda.
So obviously, the consultations, the ideal presumably is we don't want any tariffs. What is the message from business to our negotiators as they head into this, what might be quite a contentious set of talks?
Yeah, and I don't think we should expect these to be smooth waters either. I think there will be, there will be some trouble ahead, and these are difficult negotiations. We saw that last time as well. But what we're saying to government right now is, what's bad for business in Canada? It's losing your number one customer. And what we're seeing clearly is that the majority of our trade is still going to the U.S. tariff-free because of CUSMA, because of that trade agreement we have with the United States and Mexico. And so as we move into this formal review process with a meeting of the three parties in 2026, we really need to make sure that that is the priority.
Given that is the case, that we still have, of course, the best trade arrangement in the world, there are some sectors that we might start with and say get rid of those steel and aluminum tariffs, for instance. But overall, is it a good thing to drag this out? Do we actually want to slow down this process if we can and leave our existing trade deal as it is and as long as we can?
Yeah, time will tell whether the sort of slower approach that we've taken here will play in our favor. Of course, there's midterm elections coming up ahead in the United States as well, and there's also now with this shift a more congressionally oriented conversation. So the U.S. Trade Office will be conducting the review. The Canadian Chamber will be submitting to that, as we will to the Canadian and Mexico reviews. And then what they collect, and that will inform how Congress approaches this next. So it almost moves it away from the sort of more public realm, tweet-oriented trade negotiation into a more formal process next.
And of course, businesses are still dealing with the fact that this is our biggest customer. It's really important to all of Canada that the U.S. economy stays strong. We haven't yet seen the full impact of tariffs on that economy, because that's actually where, of course, as we all know, it'll show up in higher inflation, in weaker business, in poorer profit. It hasn't happened yet. Are we worried about that we're actually going to be dealing with a struggling partner in a year or two?
Well, that is a danger. I mean, the U.S. Sneezes, Canada catches a cold, is the old saying, and so we need their economy to be strong, but we also need to get to a point where they and we both are willing to talk about how important this relationship is for both parties, and so. It's a really delicate balance. What we are seeing, though, is the longer this drags out for business, it is having an impact on Canadian businesses. About 1 in 3 are saying it is impacting them directly if they're trade exposed. And we're starting to see and continuing to see, actually, what has been a trend throughout the year is a lot of capital on the sidelines. So people aren't willing to make that next big bet, that big expansion, launch the new product or open the new facility because there's so much uncertainty in the system.
Not a ton of time here, but in terms of what you would ask from our government beyond the negotiating, what kind of support are you hoping to get for the businesses that are already struggling? And we've seen it show up in manufacturing jobs, for instance. There is, in some ways, already a recession in certain sectors.
Yeah, and that is certainly a concern. There's clearly certain sectors that the U.S. has red circled as strategic and of concern, and those are the ones with the 232 tariffs. So those are concerning. We want to see those workers and that high talent we have in this country retained and maintained, and we want to see where we can a diversion into other outputs or other sorts of industries or other markets, frankly. But the biggest thing the government can do is build our trade infrastructure and our ability to be a more resilient economy across our country and to other markets over the longer term. That's a longer term play. It doesn't play to that short term need. They have to do a bit of both. So good to have you. Appreciate your time, Matthew. Thanks, Amanda. Take care. Matthew Holmes is EVP International and Chief of Public Policy at the Canadian Chamber of Commerce. Coming up, Canada's Minister of Energy and Natural Resources on the push to get big projects done. Welcome back. When it comes to major resource projects in Canada, there are a few to choose from. Here's a look by the numbers. There are 504 active natural resource projects in this country worth a combined $632.6 billion. 163 new projects were added between 2023 and 2024 with a potential capital investment of $179.6 billion. Energy projects account for 340 of the total, but their value is a combined $510 billion. 3 out of 5 of those are classified as clean technology, with a total potential investment value of $192.1 billion. Mining is the next biggest chunk of projects at 138 total, worth $117.1 billion. That's an increase of 9 projects and $23.5 billion since 2023. About half of those mining initiatives, or 67, are extracting some form of critical minerals. And of those, 36 of them are focused on copper, lithium, or nickel, 3 components of EV batteries. This week on the Wonk podcast, I sat down with Tim Hodgson, Canada's Minister of Energy and Natural Resources. I asked him about the role Canada is playing in the world right now when it comes to our resources.
Here is what the world has woken up to. If you look at the International Energy Agency's assessment of critical minerals, and I've got the chart here in front of me because I'm getting ready for the upcoming G7 Energy Ministers Conference. Of the 20 critical minerals identified by the IEA, China today controls 50% or more of the production of 14 of those critical minerals. China is the number 1 producer of 19 of those 20 critical minerals. Oftentimes they're doing that through control of processing. That's a challenge for the world. Canada can be the answer. Canada has almost every single mineral on the list. That oftentimes we are the largest. We have the largest reserves. We have an opportunity to build the right way with our allies and take those cards out of China's hands and put them into our allies' hands, and that strengthens our hand. The Prime Minister identified the critical minerals buying group as a priority at the last G7 conference in Kananaskis. It'll be a focus of the G7 energy minister meeting at the end of October in Toronto. We are working with our like-minded allies, both in the G7 and in NATO, to try and change that dynamic and take that stranglehold grip that one country has on critical minerals. Because as you've pointed out, this is key to energy transition. This is key to our new economy. If we are going to go to that new economy, all of these minerals are critical to that success.
Does that mean you would consider welcome support processing in this country? Because we've really moved away from it for decades and decades in all resource sectors.
Absolutely. We are very focused on not just mine development, but value-added processing. In several of the conversations with the premiers who are focused on their particular province's resources, they've been very, very clear that they want us to help with the value-added processing. And strategically, that's important to our allies too. I mean, one of the ways that China has got a stranglehold on these things is not so much they don't have all of these the reserves in their country, but they control the processing.
Given the ambition of his ministry's agenda, I asked Hodgson what his mental picture of success will be.
One of the things about this prime minister is he does come from a business background. Whenever we set goals as a government, one of his first questions is, what are the KPIs? What are the key performance indicators? He set right up front a key performance indicator is we will attract $500 billion of private sector capital into the Canadian economy. His view, which I think is a smart view, was if we can do that, we will give ourselves more than any other country can take away from us. We will control our own destiny. We will put Canadians to work in good paying jobs. We will retool our economy in a way where we can sell our natural resources, our energy and natural resources to all of our like-minded allies, not just our allies who we share a border with. And so my perspective is $500 billion of private sector capital attracted to the Canadian economy is the first test. The first group of projects attracts $60 billion. So we're on the way. We have more work to do, as the Prime Minister has said. We'll have another tranche we announced for Grey Cup Day. And I know you're from Winnipeg, so I'm going to be there cheering the Bombers on. There'll be another tranche by the Stanley Cup playoffs, and there'll be another tranche by the World Cup. And I think the idea and the why I went through that is the second testament is that when we have a strong, visible record of, I'll stay with the football analogy, of punching a series of projects into the end zone and scoring a touchdown. And to me, a touchdown is not just a shovel in the ground, but an operating project that's generating revenue for the proponent, for the people in the community, for the provincial and federal treasuries. When we start to have those series of projects punching the ball into the end zone, it demonstrates to the world Canada is a great place to, and the positive cycle keeps going. So those are the two metrics for me.
I also asked Hodgson how long the government needs to make real progress on some big projects.
I don't think this has an end point. I think it's a new way of thinking about things. It's kind of going back to basics on how we get things done as a country. Again, it's sort of adopting the mindset of, do we want to responsibly grow? It's not if, but it's how. And that is the retooling that we are going through right now. I think the hope is that becomes a methodology going forward. My hope is in perpetuity. But let's see where we get to. I feel very good about our early steps. We've been in office now for less than 6 months. I think we've accomplished a fair bit. We have a lot more to do. Canadians expect a lot from us. I'll end. That yes, it is true that the U.S. has caused this. They've decided to change the way the global trading system operates. But in many ways, this is a very good thing for Canada. When we are completely reliant on one trading partner, it's great as long as that trading partner wants to play by the rules that we think are fair and just. When we see that they no longer share those views, it's time for us to diversify our economy. That's in our interests. So we can thank them for poking us and prodding us to give ourselves more than anyone can take away from us.
That was some of my conversation with Tim Hodgson, Minister of Energy and Natural Resources, on this week's episode of the Wonk podcast. Coming up, young people are finding it hard to get jobs, but are they being intentionally shut out? That's still ahead. But first, independent ice cream maker Chapman's is planning a $200 million investment in Ontario to grow its operations there. The family-run company said business is booming, and one of its best customers, Premier Doug Ford, applauded the move. Chapman said it will also take the opportunity to expand into new international markets. Amidst a host of businesses slimming down, it was definitely a cool story. We're back after this. Welcome back. Youth unemployment is a growing concern, and at least part of the worry is how tech like AI might replace young workers. But is there also some built-in prejudice at play? Jennifer Moss is a workplace expert and the author of several books. Thanks for being with us, Jennifer.
Yeah, good to be here.
So historically, there's always been in some places and times a little bit of a you don't have the experience kind of conundrum for young workers. And the only way to get it, of course, is someone to overlook that. Is there at the moment a bit of built-in prejudice on the part of the generations ahead of young workers that are still entrenched in the workplace?
Yeah, we're seeing this increase in what researchers have called youngism and have been studying it for a while. But, it's always been there. We always look at the generations that are coming up and wondering why they're behaving that way. We have this bias that we were young once, so we understand. And yet right now in 2024, we're finding that from research that people in their 20s were rated less favorably by about 10 times than any other cohort. So there is a real bias towards young people, and that's showing up in postings and the reduction in job postings for young people, and a lot of ageism and how we're looking for new talent to come into our organizations.
Which is so interesting because, of course, we look back. I'm old enough to know that there's a time when we thought the millennials were this kind of lazy, entitled group. Now the millennials are the hardworking, solid center of most businesses. Do we just need to give young people time and they adjust to everything, or we adjust to them, however you want to look at it?
That's absolutely it. I mean, we always have had this bias, but now it's actually showing up in, we're seeing less opportunities for people to move into these entry-level roles, which is already competitive with AI. We're seeing things like adding in experience, 3 to 4 years experience in those entry-level jobs that we didn't see before. We're not seeing a translation from people doing internships that's actually moving into roles. And there's a disconnect that's causing us this inability to develop this talent. They're going to be 30% of our workforce by 2035. And if we don't develop them, then we're going to have a real issue with our pipeline by then.
And is there some coaching that can be done? I mean, I do think, even though some of this might be just stereotypes, this does include some of a cohort that had to go through a pandemic, that had a real kind of interruption in sort of what their normal experience might have been with summer jobs and the like. Is there something that we could do to help actually leapfrog over that and get them into the workplace in a better way?
We do. We need to have some openness because we also have to look at it as a business strategy. It isn't a benevolent strategy that we're helping young people. That's great to have human-centered leadership, but we need to look at this as strategy and bringing these young people into our organizations and understanding that they've come from a different type of upbringing. I mean, you look at young people, I'm an Xer, and the way that we raised our kids was to ask for their opinion, and there was always a give and take. There wasn't that, expectation of looking to your elders as having sort of that omnipotent answer for everything, right? And that's changed. So we have to look at this new workforce as being raised in that way. So they're going to have different expectations of deference. They also didn't have any networking, education, or training. They haven't learned to manage up. That's our job to do that, is to train young people so that they can become those hardworking millennials and then Xers and then eventually boomers that are those leaders in our organization right now.
Jennifer, so good to have you for this. Appreciate it.
Thanks for having me.
Jennifer Moss is a workplace expert and author. Time for the takeaway, and doing the same thing but expecting different results. It's hardly news that Canada has a severe housing shortage. The math has been right in front of us for years. Based on population growth and new household formation, we need to double the rate of annual building to as many as 480,000 units a year, every year for the next decade. We're nowhere near those numbers. In fact, starts are running at around half that level. So what gives? Regulations are often blamed as the chief culprit. It's too hard to get a project approved, and that makes it hard to get it financed. And for sure, there is something to that argument. But if that were the only issue, surely removing pesky regulations is one thing governments could easily do. Instead, they're collectively spending billions to try to encourage more building, but without much effect. A recent report put the slowdown in construction in another stark light. Tens of thousands of good construction jobs will be lost if we can't find a way to pick up the pace on building. So why can't we seem to solve a problem that matters to so many? Part of the answer might lie in how the sector itself operates. Housing construction in Canada is still dominated by smaller players with as few as 5 employees. That lends itself to lower productivity and weaker efficiency. That's not a knock on the home builders. It's just the nature of a smaller business. More consolidation among the companies that do the building might actually help get more built faster. It might also encourage investment in new techniques and technology that would speed up per unit construction. While the government is making big investments in efforts to get more homes built, how much of that will be spent on how homes are built and measures to try to improve that? Tax credits or even grants from market players willing to make investments or buy another firm might help spur much-needed combinations of builders. My takeaway? Hoping for a different outcome without changing your behavior is never a good strategy. When it comes to housing in Canada, let's agree that what we've been doing isn't working. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.